Hello, investors and traders. As you know, the goal of this YouTube channel is to help you develop your own investing or trading system. We follow over 100 indicators to increase the probability of success in the stock market. This channel not only provides you with these indicators and insights and into market psychology, but also recommendations on the overall market sectors and individual securities. In this video, we're kicking off a series where we'll cover various indicators. Today's focus is on indicator number one, video number one, the put call ratio. Remember, one indicator does not make a system, but we group together 5 indicators, 10 indicators, 100 indicators to give us a probability of succeeding. Traders generally use the put-call ratio as a contrarian indicator when the values reach extreme high or low levels. What this implies is that the trader sees a high put-call ratio, say 2.4, 1.42, as a buying opportunity because they believe the market sentiment is extremely bearish and will soon adjust. Those holding short positions will eventually switch to cover and the market will face a downturn. Remember extremes. I am looking at extreme levels when this indicator reaches, both on the put side and the call side. And then I'm combining it with other indicators to give me a probability. Options are contracts that give investors the right to buy or sell indexes or other financial securities at an agreed upon price and date. Puts are the option to sell, while calls are the option to buy. When the ratio of puts to call is rising, it is usually a sign that investors are growing more nervous. The book ratio, 1, is considered bearish. We look for super extreme levels. They say a picture is worth 1,000 words. If you go to the CBOE daily market statistics, you can get on a daily basis the total put-call ratio and also many other put-call ratios. I am also track the CBOE volatility index, VIX, and put call ratio. As another indicator that we use is, of course, the VIX and the VXN. This site will give you the volume, the open interest. Let's say we put the put and call option on a 5-day moving average and just taking the ratio every day and plotting it. We can see every time it hit extremes this year, both on the long and the short, it was the right opportunity to get in. Again, seeing the spikes here could be a possible signal to buy. And seeing the greed in July was a time to get out. All we're doing is having a probability of succeeding. And the extreme levels will give you a good probability of winning in this stock market. However, there is no specific number that indicates the market has reached a bottom or top. Traders generally anticipate this by looking for jumps in the ratio when it reaches outside of normal trading levels. The end of a bear or bull market usually sees extreme levels coupled with other indicators to provide a weight of evidence. Investors use several financial measures to gauge market sentiment before investing or trading, and the put-call ratio is one such financial tool that proves useful in multiple ways. Sentiment indicators assess how bullish or bearish market participants are, which can help forecast future behavior. When sentiment readings are unusually high or low, they may begin acting in a contrarian way. For example, when investors are extremely bearish, it is often a signal to contrarian traders that the market prices could start heading higher soon. What is the put-call ratio? The put-call ratio is a measurement widely used by investors to gauge the overall mood of a market. A put option gives the right to sell an asset at a predetermined price, while a call option gives the right to buy an asset at a predetermined price. If traders are buying more puts than call, it signals a rise in bearish sentiment. If they are buying more calls than puts, it suggests they foresee a bull market ahead. Understanding the put-call ratio. The put-call ratio is calculated by dividing the number of traded put options by the number of traded call options. A ratio of 1 indicates that the number of call buyers equals the number of put buyers. However, a ratio of 1 is not a perfect baseline to measure sentiment since more investors usually buy calls than puts. An average put-call ratio of 0.7 for equities is considered a good basis for evaluating sentiment. Usually, people who buy options, especially retail, are wrong. Many retail investors buy options, but they are not the sophisticated and usually lose money. The big institutions have enough money to buy the individual security itself. But sometimes hedge funds and big institutions hedge their positions. A rising put-call ratio greater than 0.7 or exceeding 1 means that traders are buying more puts than calls, suggesting the bearish sentiment is building. Investors are either speculating that the market will move lower or hedging the portfolio in case of a sell-off. A falling put-call ratio below 0.7 and approaching 0.5 is considered a bullish indicator as more calls are being bought than puts. Special considerations. While the put-call ratio helps gauge market sentiment before a market turn, it is important to monitor both the puts numerator and the calls denominator in the ratio. A reduction in the number of traded calls can increase the ratio's value, pushing it higher without an increase in put buying. This means a higher ratio doesn't necessarily signal more bearish activity, but could reflect a lack of bullish traders. The data used to calculate the put-call ratio is available from various sources, including the CBOE option exchange website. A contrarian indicator. A contrarian investor uses the put-call ratio to determine the market participation are overly bullish or bearish. An extreme high ratio signals that that market is overly bearish and could present a buying opportunity. Conversely, an extremely low ratio suggests the market is overall bullish and may be due for a pullback. No single ratio can definitively indicate the market's top or bottom, and the levels considered extreme vary over time. Investors often compare current ratio levels to historic averages to determine if the sentiment has recently shifted. A sudden rise in the ratio may indicate a rapid increase in bearish sentiment. I like it when it hits super extreme levels. I have seen a very high probability chance if something like the put-call ratio hits a 0.3, 0, or very low numbers combined with other indicators, we can get a pretty good probability of succeeding. I love the extreme levels on this indicator. How good is the put-call ratio as an indicator? The put-call ratio is one of the most reliable contrarian sentiment measures. Historically, when the market becomes overly bullish, it is often primed for a reversal. However, this indicator works best in conjunction with other indicators to form a weight of evidence on the macro market. It is most effective at extreme levels, but can also be useful for identifying intermediate market moves. This ratio is one of the many tools used in comprehensive trading system. Remember, one indicator does not make a system, and you need to compile this indicator with other indicators. This video is a series of videos going over different indicators that you can combine to make a system. You know the catchphrase: study it, analyze it, adapt it. Peace.